The market roars back. Will the gains hold, and what happens next for the U.S. economy? We'll talk about it next. Hey friends, Adam Hammer here, Chief Investment Officer at Hammer Financial Group in beautiful Buffalo, New York, and Myrtle Beach, South Carolina. All right, well, April was a tumultuous month in the financial markets in the United States and globally. Early April, we had the Trump administration announcing trade and tariff policies. The market did not react to it well. And over the course of a couple of trading sessions, we saw historic selling, not just normal selling, historic selling. It was some of the worst selling that we've seen since the pandemic in 2020, since the 2008 financial crisis. In fact, we lost on the S&P 500. We were down over 12% in 3 or 4 trading sessions. I mean, it was the volatility was extreme. The headlines were apocalyptic, and you can say to yourself that you've now lived through another historic stock market event. Of course, a short time later, in fact, only a week later, there was an announcement that there was a pause in the tariffs for 90 days, and we reversed. And from having historic selling, we saw historic buying. In fact, the NASDAQ had one of its best days ever. It was up over 11% at one point on one trading day. So I'm going to share my screen now just to give you a visual of what that looked like. It was pretty extraordinary for those of you who were following. This right here is the S&P 500, right? You can see the chart, April 2nd, 5,670, then boom, all the way down to 4,982 on April the 8th. And then, of course, as I mentioned, we had the pause, and then boom, we shot straight up again. And we've been trending a little bit higher since that point. So we will see where things head now in the market. It looks like we're now somewhat in a choppy sideways market, trading within range. Paul and I don't believe that we're going to test the lows. The lows are probably in for the year. That's not a guarantee, but we think that the market will generally trend upward. There's always volatility. There's always some ups and downs, but I think the lows are probably in for the year. Now, you've probably also heard some people on television talk about, well, this is a really nasty bear market and we're going lower and the end is near. One thing that's not often mentioned, or at least not mentioned enough in the right context, is if you're going to get a really nasty bear market, one indicator to look at is where is the employment numbers, right? Because if we have shrinking employment, people losing their jobs, that would be a big red flag. But we just had a jobs report come out in April, and you can see the headline there, right? We exceeded expectations. We actually had a pretty healthy job market. And if we have a healthy job market, it's extremely unlikely that we would see some type of long-term bear market where things are just being liquidated and selling off. Usually with a healthy labor market, people, of course, are earning income, they're spending money. And if that happens, then corporate profits will be good and the stock prices will generally move higher. So that's a key indicator to look at in the next coming months to see where the employment numbers head. So with that said, to kind of wrap up the video, you survived April. Congratulations, we all did. The market has roared back. We've made up a lot of those gains. We're still down for the year, but the long-term trend of the market and our expectation is with a healthy labor market that we'll continue to see stock prices move higher through the rest of 2025. And if you liked this video and would like more information from us, this is our website, paulhammerfinancial.com. If you click this red Contact Us button, you'll send a message directly to Paul and myself. We'll be happy to be in touch with you very soon. You can find some other resources and information on our website, and hopefully you will find those things valuable to you. With that said, thank you for watching. We'll see you on the next video. Have a great day. Take care, everyone.